Hey, good morning, guys. Today we're going to be talking about Atossa Therapeutics. As you can see, Atossa Therapeutics is a clinical stage biopharmaceutical company seeking to discover and develop innovative medicines in areas of significant unmet medical need. Atossa's current focus is on breast cancer and COVID-19. So, as you can see, this is what they're focused on. This is their website about development pipeline, clinical trials, contact us, vision, and investors. We always click on investors tab to get a little bit more information, overviews, stock info, financials, news, calendar, SEC filings, fact, governance, and presentations. Scroll down, they have their latest news, last put out 11th May 2021. Scroll down, latest financial results put out March 31st, 2021, Form 10K, annual report. You can always click on that, download it, take a look at it. Stock info showing you the open price. Yesterday, 265, previously closed at 277. And it shows you that there's a 15-minute delay. You can always look at all the other information. Leadership, advisory board, board of directors, management, presentations if you want to click on that, analyst coverage, and if you want to sign up for emails to look at the latest press releases, 10K filings or 10Q filings, all SEC filings, 8K filings, 10K filings, and Section 16 filings. So just sign up to their email alerts and you'll get all that stuff straight to your email. And without further ado, I'm going to move right into my Robinhood account. As you can see, we're actually down a few dollars over the day and after hours, right? So we're at $8,761.81, down $59.43, and negative another 61.85, right? But what we want to actually look at is Atos, ATOS. Click on that. As you can see, pharmaceutical company based off of Washington State, and at 267, negative 15 cent for the day, or negative 5.42% for the day, positive 5 cent after hours, or positive 1.91%, which means it gained back a couple of cent, right? So anyway, we're gonna highlight that. Click on the weekly chart. We're up positive 41 cent for the week, or positive 18.14% for the weekly chart. Monthly chart, we're up 79 cent, or positive 42.02% over the past month. 3-month chart, we're down negative 27 cent, or negative 9.18% over the past 3 months. And the 1-year chart, we're up positive $1.07, or positive 66.87%, right? So Atos is one of the stocks I actually decided to go ahead and do a cash secured put in. And what I'm going to do is show you right here where we have the options contract already set up. 2 contracts valued at negative 26 right now. Today's return, or yesterday's return, was positive $14, or positive 35%. The total return is positive $14, positive 35%. And then we have a cash collateral of $400 that was put to the side, right? As you can see, it's showing you that current price is going for 13 cents. We'll click on that to kind of show you exactly what's going on. Average credit per share was 20 cents per share, right? My break even is $1.80, which means that, hey, if the price drops down to $1.80, I break even. I owe nothing. But if it drops below that, I'll go into the negative. 2 contracts, expires next week on the 21st. The credit received was $40. So as soon as I put in for the 2 contracts, it locked up the $400 to purchase the shares at a $2 strike price if it drops down to $2. They gave us $40 up front. So that's 10% they gave us up front. Those are the returns, today's returns, total returns. You see, this is my history. Both put in 22 hours ago. I canceled one and I went ahead and put in for that one. But what I'm going to do is kind of show you how to set this particular play up if you want to do it today, for instance, right? So today is May 12th, 2021. I did this yesterday on the 11th. So you would click on sell and click on put. The expiring date is already set for the 21st. Current stock price is $2.67. So when the market comes on, it may go up, it may go down. But right now, if you decide to do this particular trade, you would do this one right here. This is the one that I did. As you can see, the price has already changed from the 20 cent that I got it at to 13 cent, right? So if you want to play it even closer and want to get a couple of more dollars from the premium that they're paying, you can do that as well. So you would just be playing it closer to the buck, because your strike price is the price that you're saying that you are willing to pay for the shares. So if you're willing to pay $2.50 per share for 100 shares, means that you're going to put aside $250 until May 21st, right? So they'll put $250 of your money to the side until the expiration date, and they're going to give you 43 cent per share, or $43 up front. So you have that money up front. You can do whatever you want to do with the money, but you have to know that, hey, when May 21st rolls around, and if the shares are down at $2.50, you're going to get assigned these shares, which means you have the 100 shares at that point. If you did it like me with 2 contracts, that means you're going to have 200 shares, and 2 contracts means if you did it right here, they're putting aside $500, and that would give you $86. 43 times 2 would be $86 up front to do whatever you want to do with. So for me, what I did was clicked on plus sign right here. You see it says short put, $2 put, negative 13 cent, expires on May 21st, and you see us total credit of 10 cent, right? Click on continue, and you would just type in under contracts 100 shares each. You would put 2 contracts, right? So as you can see, they're saying it's at 13 cent. You would want to fill this out, putting in 0.13. I kind of put it right there at it because I want to receive all the money I'm supposed to. Now remember, I've already did this. I'm just walking you through everything. Click on review order, and as you can see, it's going to say order price requirement, right? So it's telling me basically that, hey, they can't do it at 13 cent because anything under $3 trades in 5 cent increments, right? Right here, 5 cent increments. So they're saying, do you want to update to $10? The answer is yes. And then you would click review order, and then it would go through, right? So I don't want to actually click on submit or review anything because I don't want it to go through even further, but because I already have it set up. But at that point, you would just have to wait for the market to open, and then if it's still at 13 cent, it would execute. And what I found with Robinhood is if the price is actually 13 cent and it adjusted to 10 cent for you, then usually it goes through at 13 cent. But if the market opens and the price is adjusted down to 10 cent, then it'll actually buy at 10 cent, so usually you get that 13 cent that they're offering up front. Hopefully it goes through. That's what happened to me yesterday, and that's what usually happens to me. But anyway, that's pretty much how you set up your cash secured put. Now, what happens after it expires, right? Let's say it never makes it down to $2. Well, that means it's going to expire worthless. The money that you receive, in this case, the $26 for 2 contracts, the money that you receive, you would just keep, and you wouldn't have to buy or purchase the 200 shares of stock, right? The money that you put up, the $200 or $400, in this case, it will be released back to you on that Friday after hours. And so you would have your $400 back, and of course, $26 you had already pocketed in the beginning or today if you decide to do this trade today, right? Now, let's say it did make it down to the $2 mark by the expiration date, May 21st, right? So at May 21st, let's say it's at $2 or at $2.90. Well, that means you're going to get assigned this particular contract, right? You still get to keep the $26 that they paid you up front, as you can see right there. You're still going to keep that amount of money. But now your $400 has been used to purchase 200 shares at $2. So now you have those shares in your possession, and you can do a couple of things. You can hold on to the shares, and you can sell them at market price, right? So if the shares go back up, let's say above $2, $2.50, you can sell them right at market price and gain a 50-cent profit off the 200 shares, which means that you're going to make what? $100, right? Because you own 200 shares. Or you can go back inside the options window, and you would click on sell call. Instead of doing put, you're going to do call, and then you would change the date to June 18th, right? Because that's when the next option contract is up for this. This is a monthly call option, right? So as of right now, they're saying, hey, we're willing to give you 95 cents per share, which means if you bought 100 shares, they're giving you $95 up front. If you bought 200 shares like me, they're willing to give you what, $190 up front just for saying you'll sell at $2.50. So if you bought at $2 and you decide to sell at $2.50, that's a 50-cent difference. You own 200 shares. That's $100 that you would make between $2 and $2.50 plus another $190 that they're paying you. That puts you at $290 with the premium paid to you and the sales price that you could possibly sell it. Now, if you decide to sell even higher, obviously at $3, you can make even more money. But it's all up to you on how you decide to structure the deal. Anyway, hopefully you guys learned something about cash secured puts and sell calls, which are covered calls once you actually own the stocks, right? And if you have any questions, concerns, hey man, always just send me a message. I'll always respond to you. I'll try to get to you in a timely manner within that day or sometime within a week. Hey, please like, comment, subscribe to the channel. Hey, anything I can do to help, I will always do. Have a good one. Bye.